Hello everybody and welcome to Options Paycheck Live. Today I will be reviewing the execution of our planned trades after Monday's market open. If you are new to the channel, I focus on practical options strategies to build a reliable second income. Please like this video if you find it helpful and subscribe to the channel to see my trades. Let's get started. Topics to cover today. I will go and review planned orders. I will update the logbook as always, and I will adjust open orders if there are any. Let's go to interactive brokers and see my portfolio and see the trades. As you can see, there are no trades that would be outstanding, so all trades have been executed. And so what we can do is we will go through the positions, through each and every stock and open option contract and review the goal, review what is the situation and update the logbook with the prices so that we can see how much premium we have earned. All right, so I will go and check the Cleveland Cliffs first. So I will look at the goal of the trade and I will look and assess how it went. Cleveland Cliffs, my goal was to sell covered calls for maximum premium while keeping the stock. The plan was to sell for 6 cents as a premium and strike price $10.50. We have covered calls with the strike price of $10.50 and average price is actually 2 cents. So what we can see, there is difference and we actually sold for less. And I'm just checking if the fees are here. No, they are not. So I will update the fees offline in the sheet, and we will review it later, probably during the Sunday's call. All right, so that's for Cleveland Cliffs, and I can say it's not planned anymore, but it's rather open. Next one is GameStop. And again, let's have a look on the goal of the trade and how it went. So the goal was to sell for maximum premium while keep the stock or keeping the stock. Again, let's go to portfolio, GameStop, strike price $32. Sold 2 contracts for 9 cents each. So let's update the logbook. It is open position now. 32 strike price, covered call, 2 contracts, and it was 9 cents. Right, 9 cents, so slightly less. Now let's have a look on Nvidia. And again, goal of the trade and how it went. So goal of the trade for a strike price of 102 is to roll this contract until it's out of money and I can keep the stock. So the contract is open. It was rolled from the past, from the last week, and we have already abated the premium. For next Nvidia contract, the strike price was 115, and the goal for this one was to sell for maximum premium while not selling at the loss. So I was buying the shares for $115, and so I decided to maximize the premium while betting on Nvidia price going below 115, and I might potentially still keep the stock, but if not, I will not be selling at loss. I will be selling at the same price as I purchased the stock, and I will get a nice premium. So the plan was to get a premium of $2.39 per contract and to sell one contract. It is this option contract, so covered call, 115th strike price, and you can see that the price of the contract is slightly less, $1.98. So let me actually put it here, $1.98. The reason for this is, and let's have a look on a chart. The reason for a lower price is because the price was actually dropping, right? The price was going down, and when I was opening the contract, the price was somewhere at $112. So that's why the premium is less than when we planned on Friday, right? And the strike price is here in the chart. Again, is the yellow line with $115. All right. So this was for Nvidia, and we will go to Rivian. Again, review the goal of the trade and assess how this went. Rivian is here. Strike price $12.50. And I wanted to sell two cash covered puts. So for Rivian, it's not covered calls, but it's cash covered puts. And I I want to get as much premium as possible while trying to buy the stock for $12.50. Let's have a look in interactive brokers and review the position. So average price is 30 cents, and I have two contracts. So I am earning a little bit more premium. Again, the reason was that the price started to drop. I will show you the chart. The price started to drop, so I was selling the cash covered puts somewhere here, and obviously price was dropping more and more, and now so now the price is a little bit up, but still there's decline, and my bet is basically that the price will be dropping, and I will be able to buy the stock at 12.50. Let's see what the results will bring, and whether there will be some either positive or negative surprise. All right, so I update the Google Sheet as well, and we will go to portfolio again, and let's have a look on the last. Let's have a look on the last position. It is Tesla, and for Tesla I was planning to sell covered calls with the strike price of 330, and the goal was to sell for maximum premium while keeping the stock. So what was strike price in the end? So strike price, the premium in the end is 27 cents. So it's actually way less than I originally planned for. The reason, of course, the reason is the same. the price of the stocks started to drop, and so therefore the premium was less. I was adjusting the trade because the options would not be open at all, so I was adjusting the trade, and yeah, that resulted in lower premium. All right, so I'll just update the Google Sheet, and you can see that all trades that I've planned been executed. The expected or planned premium was $494 for all trades. Now, after adjustments and after the situation on the market, uh, I'm getting $357 as a premium this week. 357, which is 23% return on my invested capital. It's still nice premium, and I will be reviewing and observing if my trades are meeting the goals. My plan is basically to let the trades go until Friday, and for most of them expire worthless, so that I just get the premium. But if there is any dramatic movement on the market, I might adjust the trades accordingly. All right, so this was for review of the orders and of trades. Please let me know in the comments if you find it helpful. What are your strategies? How you plan your trades? I'm really curious. What are your thoughts about this? And please also let me know if there is anything that you are missing and you would like to see in regards to my trades. To wrap up, thank you for joining today's Options Paycheck Live. We reviewed the orders, we reviewed the goals, we reviewed the trades. We adjusted the option trades logbook. Obviously, we adjusted also the premiums and profits. It's slightly less than it was originally planned, but still I'm making nice profit this week, $357. And overall, in 6 weeks, I already made $2,000, 126 $26. And I will be back on latest on Sunday with planning new trades, and potentially during the week if there is something dramatic on the market happening. If you found this session helpful, please like and subscribe to stay updated. And let's continue building a reliable second income together through options trading. And until next time, bye bye, guys.